Okay, so good morning, everyone. Welcome to today's macro snapshot. We are Tuesday, June the 4th, 2024. Let's immediately look at a few charts, guys, and see what's going on. Actually, the first thing to keep in mind is that yesterday we had a bit of a concern about sort of growth, I would say. We had the ISM manufacturing yesterday, which came in quite a lot lower than expected, including new orders are now under inventory levels. We had the headline number, which was lower than expected, and basically prices paid coming down. So what we're starting to see is sort of concerns about growth, and that new and that ISM manufacturing from the US yesterday also came after we had sort of slightly weakish ISMs over in Europe. So there's a bit of a general concern now that maybe global growth suddenly is starting to show a few signs of cracking. And what the market will want to be looking at today, if we look here on the top left, is we have factory orders from the US today coming up at 10 o'clock. That's expected to be about 0.6, so a bit weaker. So you can see 0.6 compared to 1.6 last time. So factory orders are expected to be coming down a little bit. And then probably more importantly, we have the JOLTS, the job openings and labor turnover kind of numbers coming out at 10 o'clock as well. So 10 o'clock, an important set of data. That's expected to come in at 8.35 million, which is meant to be, well, the consensus is down a little bit compared to last month's. And what we really need to be looking at there is also like the level of quits, the amount of people who are voluntarily quitting their job. And the importance of these two sort of numbers this morning is just that the market wants to see if yesterday's weakness in the ISM manufacturing is continuing and confirmed, and whether this sort of concern about growth and the slowdown in growth is justified. So that's definitely going to be quite important this morning, and that should be moving the US dollar, the bond market, and maybe even stocks. So if we have a look at the stocks here, let's just have a look at the S&P 500, which I have up. Just give me a second, guys, which I have up here. So if we throw this on, let me just move a few things here. So as you guys could see yesterday, a little bit of a red candle. I'll throw this on a 4-hour chart, which I think might be a bit easier to get a sense of what's going on. What we can see is that we had a high sort of last Thursday. And then essentially since then we had that big sort of a bounce basically in the last hour of Friday afternoon. Now, if you look at this fib here, this is fib going from this sort of up impulse here on Thursday, on the 2nd of May, it did bounce off the 50% retracement, and so far so good. But what we started to see yesterday, again, this is a 4-hour chart, is just a little bit of weakness coming in after the ISM. So what for me was quite significant was that the low numbers of ISM manufacturing caused the equities to sell off over the course of the day, especially in something like the Russell, which we'll have a look at here. If you look at we'll look at that in a second. But so my point here is that is the market starting to sort of take economic data which is weak as not so much, oh, that's great, the Fed is going to cut more, but a little bit more of like, maybe the Fed will be cutting, but maybe not super aggressively. And, the actual real economy is falling off a little bit. So it starts to become a sort of bad news is bad news, growth, lack of growth kind of story. So that's something definitely to be looking out for. What I would say today is the key levels, again, after the data at 10 a.m., just want to see how the stocks reacts here. But really what's going to be pretty important is this 5,200 level here, at least on the S&P futures here. It's the front contract. As you see, we have a bit of horizontal support here at the 5,200. It's also where the market bought that 50% dip on Friday. So that's it. The other thing to look out here, just from a technical perspective, if you see we do a shorter term fib, the reversal here, we can see here that it actually failed again on this 4-hour chart at the 61.8 here. So basically, yes, it was bought on Friday at the close, but as we saw in yesterday's session here, the market failing at that 61.8% fib. So really at this point, the bulls have to sort of pick it up. And I would say that, potentially on a very shorter term fib here, you would say it's now at about the 38% down towards the 58%. They really had to step in here If it starts to go below this level here, which is, let's call it around about 52.45, that is a bit of a danger signal. And then a definite danger signal, as I say, would be under the 5200 level. So they're the key levels to be watching out today. And specifically, I'd urge everyone to be looking to see that, on the hotter data, if that's considered supportive, or on a weaker data, if that's considered a negative. And are we getting away, as I said, from this idea that, bad news is good news? Bad news really is bad news. The other thing which I just want to draw your attention to, guys, yesterday is just look at the Russell. So this is, just keep in mind, this is the S&P 500. If we look at the Russell, which is much more considered, small caps, mid-America, more of the domestic US sort of stock market, so to speak, you can see that the price action has been much, much weaker here. On the S&P, it'd be sort of up here, whereas on the Russell down here, getting back towards the 61.8% fib retracement. And then what's also quite interesting, if we look at the RSP, which is the equal weighted. So not being held up by the NVIDIAs and the mega caps. This is equal weight. Every single stock has its own sort of 0.5% weighting here. You can see the price action here. It's already got below the 61.8% fib retracement. So much, much weaker sort of movement. So again, we're getting to the situation where it looks like the magnificent, 4, 5, 6, whatever you want to call it, the NVIDIAs, the Googles, the Apples, the metas are keeping this market afloat, and any sign that they're cracking is definitely something to be looking out for. So just while we're looking at, we're talking about that, let's have a quick look at NVIDIA here, for example, which, everyone's been very, very focused on recently. And you can see here that, it did complete a measured move, like a Fibonacci extension. If you go here, we see the Fibonacci extension going up there. It got to that, and it's, completed the measured move, came down a little bit, showing a little bit, so it's still hanging in there. But so this is really the key one to be looking out for. And any signs that, let's say, NVIDIA and the other 2 or 3 mega caps in the tech sector are showing any signs of weakness, I think that's a sign that the rest of the market could definitely fall, and probably led by the Russell, which seems to be the one which is under a lot of pressure. Okay, but just looking at some other stuff. Want to look at oil. Oil's had a pretty crazy, well, not crazy. I mean, oil often sells off. Let's not exaggerate. But obviously, there's 2 issues here. First of all, is the sort of so-called roadmap by OPEC Plus. We know that over the weekend they are, they did a very complex mixture of sort of, reducing, what are we saying, gradually reducing the amount of cuts, but technically keeping the cuts for sort of longer, and a lot of complications. But the bottom line, as I explained yesterday, is that anywhere between 500 to 750,000 extra barrels will be coming onto the market in 2024, and probably more in 2025. So all that to say, a little bit of extra supply, but then that added to the weakness in the European PMIs yesterday and the US manufacturing PMI yesterday, bringing this idea to the forefront that, maybe the global economies are sort of weakening a little bit, and therefore demand. So kind of a double hit, a double whammy to the oil market. And as you can see here, breaking down quite significantly, this is the CL1 contract, similar kind of scenario, obviously with the Brent. I thought yesterday it might be a bit of a shot holding at the 75.50 level, which is, this big 61.8 fib retracement level here. But to be honest, it held there for, kind of half an hour or so, and essentially blew right through. So now we've had overnight in the Asia Pacific and the European sessions, it's gone down another, looks like about another $1.50 or so, actually about $2, 2% or $1.50 since 6 p.m. futures last night. So you've got to say at this point, in the absence of, if you look at sort of some of the exponential moving averages here, the moving averages well below the MAs, not a huge amount of technical support here. I mean, there is, potentially, some kind of level at 71.45, then you can go down to 69.14. But you've got to say, knowing oil, that it looks as though it may want to retest down another, $4 or $5 all the way down to 67.40. So quite a lot of pressure is oil. The only thing which I would say is that if you look at some of the stochastics momentum, we can see here that on the RSI, it is pretty much overbought. It's at a 28 level. Down here, you see at 28. So it is getting into an overbought level in terms of the RSI. So we could have some kind of bounce. Momentum is still, obviously towards the downside. So be looking a lot at oil today. Again, what could be interesting is, because it's overbought on the RSI, Does it kind of crawl its way back up to 75.44? That would be very, very interesting if it gets back there, because if it cannot, have any kind of bounce up there and hold there, then I'd have to say that a retest down towards the 67.30 level is probably on the cards. Just one thing, a couple of other things I would say here as well is that the time spreads, if you look at December 24, December 25, also very weak. They were holding up relatively well yesterday, but in the last 12 hours, they've weakened quite a lot. So the time spreads are going down. Although if you see December 24, December 25, getting to a little bit of a level here at $2.50-ish, that could hold it up for a little bit. The other thing as well is that we have the API this afternoon at 4:30, which is the private inventory report. Let's look at that. If that is supportive and we get a big sort of drawdown, maybe that will staunch the bleeding a little bit. But basically, oil at this point under a lot of pressure, and that has supported that weakness by if we have a quick look here at the gasoline chart, the RB1 chart, the RBOB chart here, that also is just going down a lot again. A little bit of horizontal resistance at 2.28 to $2.30-ish, but basically pretty weak. So oil under a lot of pressure at the moment. Now, what that means, apart from the fact that I'll have a tiny bit of tea, is that if we have a weak growth story and a little bit of uncertainty with some elections in emerging markets, which I'll get to in a second, that's put the fact that oil is going down and energy complex is going down, that's actually been quite useful for bond yields in the sense that's less deflationary, less inflationary. So that is deflationary. And what we've been seeing, if we look at, let's say, the German 10-year yield, we can see that that's had a couple of days going down. And if we go across to the US, of course, let's just look at the US, like the benchmark, the 10-year, we can see the 10-year now trading at about 438 basis points. So over the last 3 or 4 days, this whole combination that, maybe there's a bit of an economic slowdown slowly happening in the US, PMIs is showing less confidence, and let's say energy complex going down in price. We're seeing less, let's call it inflationary pressures. And so we're seeing that the yields are coming down. But what's interesting, that's not really giving a huge amount of support for the stock. So that's an unusual dynamic happening there. But basically, the yields are going down. That's definitely something to be looking out for, and a little bit of risk off as well. And that's just something which is quite interesting, because if we look at, let's look at Mexico. So we know that there could be a super majority for the new president, Sheinbaum, I believe the lady's name is. She's relatively left-wing. A super majority of over 2/3 in the Congress and the Senate also means that some of these more slightly left-leaning sort of policies, which are not very market-friendly, may be able to be enacted. And we can see yesterday that the Mexican peso was absolutely, took a very heavy hit. And we can look here, where are we? Let's see if I've got that here. Yeah, so if we just look on the futures here, like it was down 4 or 5% here, and it's still today overnight. You see the peso down a lot. And of course, the peso is being bought a lot as a carry trade against the low yielders like the yen and the Swiss franc. And we can see, let's say Mexico, the peso versus the Japanese yen here, absolutely being destroyed yesterday. So Mexico under a lot of pressure. We also see that if we look at the Mexican ETF, I think EWW, yeah. So if you look here, also down significantly, and in pre-market still down another sort of 50 or 60 cents. So the market not at all liking the possibility that a slightly left-leaning market unfriendly government may have a super majority and therefore be able to maybe nationalize some industries and stuff. So Mexico had been the darling of a lot of emerging market traders over the last basically since the Ukraine war broke out and this whole concept of onshoring came on, but really under quite a lot of pressure. And also what's interesting this morning is that the election in India is looking like still a victory for Modi, but maybe less of a landslide, and therefore the market doesn't like that lack of stability. And we can see that if we look at the index for, I think I've got the Sensex here somewhere. Do I have the Sensex? Global equity. Yeah, here's the Sensex. You can see that that's had a big sort of red candle, and also the Indian rupee, the currency, down a lot. So, and also, of course, across in South Africa, we have the African National Conference. For the first time in 30 years since the ending of apartheid, they only got about 40% of the vote. They're going to have to go in a coalition, maybe with a slightly more left-leaning kind of party. So all that to say that in India, Mexico, and and South Africa, all very important sort of emerging market countries. A little bit of uncertainty, even a little bit of sort of the potential for market unfriendly sort of governments coming in, and uncertainty. So we're seeing the emerging markets under pressure, and probably we'll see the emerging market ETF, EEM is the ticker, gapping down over the last couple of days. So under a little bit of pressure. You can see here in the pre-market down as well, down to 41, $42. So that's possibly giving a little bit of a safe, hefty bid as well. So definitely something there to be keep your eyes on today. And that could be something. Now, with that sort of a little bit of a scare about global growth in the developed markets and a little bit of risk off in the emerging markets, that's not great for the risk currencies either. And so we can see that overnight, we can see things like the Aussie dollar down 61 basis points. That had been going pretty well. We can also see the Kiwi down 32 basis points. It's just interesting for those of you who trade that the Kiwi is still sort of outperforming the Aussie a little bit. That's kind of interesting. But also we can see CAD down a little bit. Now, of course, we do have the Bank of Canada tomorrow. We'll talk about that later today. But basically, the dollar block, so the Kiwi, the Loonie, and the Aussie all down today against the US dollar, and giving a little bit of a safe haven bid here. We can see that the Swiss franc doing pretty well. I mean, that was a technical bounce as well. You can see here there's like a quadruple bottom, which actually held. We had Swiss CPI this morning, which came in as expected. No big surprises here. But the Swiss franc doing pretty well. We also see the yen doing not too badly as well. And apart from a little bit of a safe haven bid, there were some headlines out I think about an hour ago or so on Bloomberg, basically saying that the Bank of Japan may be reducing their purchases of bonds, starting to think about that. So this whole idea that less is sort of QE, so to speak, and that's underpinning the yields, pushing up the yields in Japan, which is supporting the Japanese yen, of course. That's interesting to see if there's going to be some follow through on the US yields, maybe push those yields up a little bit, because if the Japanese yields go up and the BOJ is seen to be reducing their bond purchases, that will not be taken well by the global developed markets in terms of bond yields. So that's definitely something to be looking out for. One thing I will say today, the dollar yesterday had a very clean move down on the back of the weaker than expected ISM manufacturing. See some red candles here on the daily. Just getting a little bit of support here, safe haven. So pretty key level. Just looks like the dollar, finding a little bit of support. To be honest, that's probably going to be dependent today on the JOLTS number. And then, of course, we get a lot of data going into the end of the week. So if the JOLTS number comes in weaker than expected, and the factory orders today, we could see the dollar index falling below there. And that could quite possibly, cause the euro to break out of its sort of topside resistance here at about 109.10. So a lot to play for at 10 o'clock. Let's see how we go. And I might leave it there for the moment. Okay, guys, take care, and we shall keep on talking. Thanks very much. Hope that was helpful.